Good afternoon, ladies and gentlemen. So I'm happy to welcome you on our new webinar together with Dr.Elder. So we have these sessions like each month, and I'm happy that Alexander joined our webinars to share his experience, to hear his ideas and view on the market. But before we start, as usual, I will say some words about our company. And to start, as usual, I will remind about risks, because it's important to understand that trading and investing and all those activities are involved risk, and you need to understand risk before starting any activities. For those who participate on our webinars for the first time, I want to say that Admirals is a global brokerage company, so we work more than 21 years. We work in different countries, in different jurisdictions, and maybe for those who joined, also I will do a small announcement that recently we got a license in Canada. So Admirals will start operation like in Canada in a few months, and also we are planning to start operation in South Africa. So it's like will be new licenses for us and new coverage for our clients. Of course, we provide different types of accounts, like for trading and for investing. So you can consult with your personal manager to understand which type of account is suited for you better. Also to remind that one of the greatest features we released recently, not recently, already like more than months ago, but right now in invest accounts, we provide opportunity to for fractional shares trading. So you can buy only part of stocks, so it's might be available for expensive stocks like Amazon, for example. So right now you don't need like to buy the whole stock, you can buy only part of it. And also we provide a copy trading service for our clients. So if you're more, I would say, passive investor, so you can also check leaderboard in our traders room, and maybe this service will be suitable now for you. I want to remind that we have a YouTube channel. I encourage you to subscribe, because as I shared before Alexander joined, we had last month a webinar where Alexander made a small introduction, especially for those who participate our webinars for the first time. So there you can watch explanation how to use and all the things. I will share a link when I finish my introduction, and also I want to encourage you to subscribe to our Telegram channel. There we do all announcements about our upcoming events, and later on we also share recordings. So if you will miss like next time our webinar, so there you can find also a recording of the event. For today's agenda, as usual, we will go through analysis together with Alexander to look at main markets, and maybe we can also add Nasdaq Index. So it's also interesting to look at it, because it's the falling is continuing. So yeah, we discuss current situation. It will be some stocks to overview. Later on, like in the end of our webinar, after the main topic, I will also say some words about how to use Alexander's indicators in MT5 platform, and also I will say some words about our contest, which we have also on our YouTube channel, where everyone, like all participants, can get a book with Alexander's signature. But I will say some words about this a little bit later. And that's it from my side, like as an introduction, and I want to pass a microphone to Alexander. Every time it's a pleasure to be here to listen Alexander, and it's really great. So Alexander, I'm passing the microphone to you.
Thank you very much, Roman. Thank you for your kind introduction. And it's nice that you always begin by saying trading is risky, it involves risks. This is something that most beginners totally overlook. And I would like to add to that when you trade the markets, you can trade sort of quote unquote straight instruments, shares, ETFs, now even fractional shares. But they also have leveraged instruments. And of course, a beginner with a small account looks at with a tiny account very often, looks at leveraged instruments and says, oh, I'm going to trade leveraged instruments so I can get more profit. Completely forgetting about the fact that leverage works both ways. When you're right, you're doubly or triply right. And when you're wrong, you're doubly or triply wrong, and your account can be badly damaged. So you really have to pay attention to risk management and risk control. And that's actually one of the topics in my latest book, The New Trading for a Living. I first wrote Trading for a Living over 20 years ago, and that was the weakest part of the book, of the original book, risk management, risk control. I completely, almost completely reworked the book, and really the biggest thing, the biggest new thing is how exactly to manage risk, how to plan your trades. Boring topics. Everybody wants to say, how do I find a good trade? How do I find a good trade? We'll talk about it today, and I hope I'll be able to point a few out to you. But the foundation of this whole thing is for long-term success and survival is controlling risk, never allowing the markets to take a bite out of your account. Little losses are unavoidable. I cannot trade with 100% success. Occasionally I have losing trades. The point is to cut those losing trades early enough so that your account is not hurt. And of course, then the question becomes, well, what's early enough? You don't want to, do you want to run if your account goes a tiny little percentage against you? That's a whole other topic. So read the book and maybe we'll take it up today if we have time. But Roman, I guess you want to start the way we always do, which is to look at the charts of key markets and discuss them. When we do, actually, one thing which I would very much like to show you. Let's start, Roman, let's start with your software as always, but then in a few minutes, I will ask you to hand the control over to me for a few minutes. And I want to show some tools that I have in my system, and then we'll go back to you. So the S&Ps. For those who are new to this webinar, those who've heard me before certainly heard it many times, but it's very important to analyze markets in more than one time frame. And Roman, question to you: do you want me to discuss indicators, or we've done it last time and people should really?
Yes. No, I just shared the link to recording of previous webinars, so that's fine.
Yeah.
We don't need to stop it.
Fantastic. So successful trading is simple. The biggest issue, the biggest thing is discipline, self-control, things like that. But as far as the technique, there is really not a huge amount to it. And so you can see here two charts, weekly on the left, daily on the right. And they both have the same small number of indicators. Both charts have two exponential moving averages, 26 and 13, if memory serves right. And I call the space between those two moving averages the value zone. There is a reason for that, which we discussed in previous classes. So as soon as I look at the chart, I can say this market is undervalued or this market is overvalued. And you can see right away that the weekly market is, the weekly S&P is severely undervalued, and that the daily S&P is quite undervalued. Both are below their value zone. The second tool that I like to put on every chart is envelopes, and envelopes show overbought and oversold areas of the market. So the markets are basically manic depressive, and when markets are at or near the upper channel line, they're manic, and when they're near or below the lower channel line, they're depressed. And there's a wonderful quote from Warren Buffett, the greatest investor of our era. Buffett says, when everybody is greedy, be fearful. And when everybody is fearful, be greedy. So you take a look at this weekly chart and tell me, is everybody greedy here or is everybody fearful? The third indicator, you see those vertical green and red lines in the second window. That's MACD, and there are MACD lines and MACD histogram. And you can see that the MACD is declining, indicating a downtrend. And in the final window below is an indicator called force index, which tracks volume as well as price. And you can see here a very attractive bullish divergence. You can see two downward stabs in February, and again now in in May. So you can see that in February, the S&P was around 4,200, and look how deep force index was. And now S&P is below 4,000, so S&P is lower, but the bottom of the force index is much more shallow. This is a bullish divergence. Once again, Mr. Warren Buffett, be fearful when everybody is greedy. Be greedy when everybody is fearful. And from what I understand, he is heavily shopping in the last month or so. So we make a strategic decision on the weekly chart. And the weekly chart basically says the trend is down, the value zone is declining, but prices are in a severely oversold zone. This is where people panic and throw perfectly good investments out of the window simply because of fear and because of personal mismanagement. Because if you buy a stock and it starts going against you, and you don't have a protective stop, if you don't sell it early enough and keep on holding and waiting, this is where final panicky groups are selling. People who should have sold in December, people who should have sold in February and who didn't do what had to be done, now they're panicking and tossing perfectly good stocks out for sale. And so I'm looking at the weekly chart on the left, and I'm saying the trend is still down. It is approaching a turning point. We have a bullish divergence of force index, and this is the time to be looking not for selling, but for buying opportunities. Strategic decision, nothing specific yet. Specific decisions are made on the daily chart. We turn to the right side of the screen, daily chart, same indicators. And we can see that there was a hugely panicky bottom last week, which ended with what I call, or actually my long ago translator, the woman who translated my first book from English into Russian in Moscow, now unfortunately deceased. She named it a kangaroo tail. I had a different word for it. And a kangaroo tail is a bar longer than average, sticking out of a tight weave of prices. Of course, if you go towards the left side of the chart, you can see an absolutely beautiful kangaroo tail in February. I mean, that's a classic. They don't always work this way. If we move towards the right, you can see a kangaroo tail in April, and then the second one in early May. It basically shows that the market explored going lower and didn't find attractive, didn't find much activity there. So markets often reverse after kangaroo tail. I tend to trade against kangaroo tails. When I see them, I like to trade against them. Sometimes the lows of those kangaroo tails get retested. Again, if you go towards the left side of the same chart, you will see how there was a kangaroo tail in February, and then in March, there was a retest of that low. Doesn't always happen this way, but the market is open as we speak, and as I look at it, the market is dropping and dropping heavily. People are panicking. People who should have sold 2 months ago are selling today. And I'm just looking at the thing, excuse me, looking at the thing and saying, looks like it's groping for a bottom, groping for a bottom. The market is near a bottom here. What I would like to show, Roman, if you don't mind, if you turn control over to me, I want to show a couple of indicators that I use. Okay, share screen, 1 second. And share screen, and where is my screen? Here, share. So it just started reloading, so give me a second. Here it is. What I would like to show you is this indicator, the new high, new low index. This is something I calculate every day, import data by hand and do it. So what you can see, what I hope you can see here, again, on the left is the weekly chart. On the right is the daily chart. And so on the daily chart, I follow the new high, new low index in 3 windows, 1 month, 3 months, and a year. But the big action, the massive long-term big action, is on the left side of this screen. It's let me expand this. Let me expand this chart. What happens? It's a signal that occurs only several times in a decade. A very unusual, very rare signal. So the new highs are the leaders in strength. The new lows are the leaders in weakness. And when we look at the daily chart, we can discuss the relationship between the new highs and the new lows. But on the weekly charts, there is this signal. I see some people are raising hands, but I'm not going to stop and read questions. I really have to deliver this information. If there is time available, I'll try to look at some questions later. So the new highs are the leaders in strength, the new lows the leaders in weakness. And on an average day, there are usually several hundred stocks making new highs and several hundred stocks making new lows. The weekly new high and new low combines the last 5 days action. When the weekly new high new low index drops below -4,000, below -4,000, which means basically that for the last 5 days, there were 800 more new lows than new highs, an extremely high number and a sustainably low number. So it shows that people have been dumping stocks like crazy. If the weekly new high new low index sinks below 4,000, which happens very seldom, and then it rises above that level, it produces a spike, what I named a spike signal. And you can see, well, let's start from the past. Let's see how far my chart goes. Here, okay, it goes to 2013. We had a spike signal at the beginning of 2016. You see it here at the right edge of the screen? And that was, and look what happened after the signal. And by the way, kangaroo tail was there, a retest of the low, the whole thing. So 2016, Trump gets elected. There is a massive bull market going on. S&P goes above the upper channel line. The patient is manic. And then in 2018, notice the bearish divergence of the weekly new high new low index. In 2018, this overbought market, or this 2017, 2018, the market collapses towards the end of the year. And again, what do we see at the right edge of the chart? A spike, right? The market, this decline in the S&P increased the number of new lows over more than new high, new low index sank below minus 4,000. Everybody is in a state of panic. It rallies above the $4,000, the minus 4,000 line. And of course, nobody believes this rally and should have believed it, because look what goes on next. The bull market resumes and goes on for the next 2 years. It's now, we're looking at the chart of 2019. The economy is booming, markets are booming worldwide, everybody's happy. And then the virus erupts out of China and crashes the world economies and the market. And look what happens again. The weekly new high new low sinks to minus 8,000. As soon as it rises above minus 4,000, it activates a spike signal. And this is March of 2020. How would you have liked to be buying at that point? And a bull market begins, right? So the bull market goes on. This is 2021. Everybody is buying stocks, staying at home, getting in the United States, getting government money, and putting that money into the crazy stocks at crazy prices. Look at this bearish divergence of the new high new low index. I became very concerned in November of 2021. At that point, I moved all my retirement funds from equities into cash. I started in December, I started shorting in my real trading account, not retirement, but a normal trading account. And here we are. We're in a bear market. The bear market is giving us lower lows and lower lows. And this week on Tuesday, we got a spike signal. So it looks terrible, this chart, and it always looks terrible during a bear market. But the point is, when a spike signal occurs, it indicates that the bottom is at hand. I want to show you one more chart that shows the worst bear market of recent decades, the 2008 bear market. And the yellow bars here mark spike signals during that market. That's the market that will live in memory for the generation. Spike signal and the rally towards the value zone. Spike signal, rally towards the value zone. Spike signal and rally towards the value zone. This is the only, where my cursor is moving, that's the only spike signal which did not give us a good rally. And that's when the market was in its absolutely worst shape. Lehman Brothers went bankrupt. The Wall Street was just about at a standstill. And then it continues again, spike signal, rally to value zone, spike signal, rally to value zone. And finally, in March of 2009, the final spike signal, and the market went for the next 3 years until the next spike signal occurred. So this, even during the most severe bear market, spike signals gave us rallies. And when we're not in a severe bear market, but in a normal normal bear market, which is what we're having now, spike signal indicates one of two things: either the bear market is over, or we're going to have a correctional rally that will last several weeks and perhaps several months. I don't think the bear market is finished. I think we will see lower prices ahead, but I do think that this market is tracing a bottom, and that we will, once it stabilizes, we will have a rally that will last for several weeks or several months. The target for this rally is the value zone of the S&P. S&P right now is trading at slightly below the 4,000 level for the S&P. My target is about 4,300. So it's about 7% rally. Serious business. Roman, thank you very much. I'm stopping sharing and back to you and to your charts. Okay?
Yes. Okay.
Okay.
Thank you.
All yours.
Just okay, and I'm here. Also, I added Nasdaq Index, so just we don't have it like normally, but I think it's also interesting to hear your opinion about that one, because a lot of people buy, let's say, technological companies. So
yeah. Well, very similar to the S&P. I mean, if you took the markings off, I would say it is S&P. Again, strategic decision on the weekly chart. We look there and we see that it's severely oversold. The entire last two bars below the channel, rare occurrence, and it shows a severely oversold market. And it shows people are panicking and selling things which should have been sold a long time ago. They're selling it late. Well, let me. I'll make a comment about that in a minute. We look on the right side with the daily chart, and we can see that the real panicky bottom was last week, and now S&P, now the Nasdaq is declining and hitting its channel once again. There is a beautiful, on the left side, on the weekly chart, there's a beautiful divergence of the force index, and nothing very clear on the daily chart. I started saying a minute ago, sort of smiling, looking at this thing. You've got to ask a question. You got to ask yourself a question. When you trade, what are you and hope to make profits? What are you being paid for? What's your function in the market that the money should come to you? If you're a teacher, you get paid for teaching. If you're a driver, you're paid for driving. If you're a lawyer, you're paid for lawyering. You provide some kind of service. So what service do you provide in the stock market that you should walk away with profit? What is your service in the stock market? Ask yourself this question. Well, I feel that my function in the stock market, in trading, when I trade, is helping people who are eager to do something and can't do it. So right now, people are panicking and they're selling perfectly good stocks. Please take them off of my hand. They're burning my fingers. And I'll take it off of their fingers at a discount, of course. When the market is very high and everybody says, I need more stock, I need more stock, I go and I sell short. I create more supply there. So the function of a serious trader is being like a social worker, providing supply, meeting demand. It's sort of a half joke, half serious. You have to figure out where people are hurting and come in on the opposite side. Right now, buyers of longs are hurting. Well, they want to sell. Buy it from them if you can get a very good price and if the technical picture is good. That's my approach. Roman, back to you.
Thank you, Alexander. I'm adding DEX 40. Just
seems like a very short chart.
Just takes time for.
I think if you rub the keyboard, it works faster.
Oh, it's just updating data. I
had the same issue. Yeah. So looking at the chart of the DAX, it's actually quite strong. I mean, it had this tremendous decline in February when the Russian Federation invaded Ukraine, and Germany is right in the neighborhood. So, so that was the reaction to the war, essentially, in their backyard. it recovered into the value zone, had a retest last couple of weeks, touched the envelope, touched the lower envelope line, and this week it's doing quite nicely. This week it's trading in the vicinity of last week's closing, stronger than the United States, interestingly enough. And on the daily chart, the rally started last week, continued Monday and Tuesday, and now it's reacting back to the value zone, kind of normal pullback in an uptrend. Not the time to panic, I think. And again, if you look at the force index, you see very nice bullish divergences on the weekly chart. Look how bears are becoming weaker, and nothing much from the daily chart.
Thank you, Alexander. Let's look at EURUSD.
Yeah. Huh. Well, this is in general. I find currencies difficult to trade because they're driven so much not by free market factors, but by government interventions of various kinds. Having said that, okay, so we have weekly on the left, daily on the right. Again, having said that, we see a tremendous panicky move that culminated last week with well, for the last 3 weeks, the entire weekly bars were below the envelope. And what we see here, that the impulse system has just changed from red to green. It actually, no, it shouldn't, from red to blue, I'm sorry, from red to blue. I'm a contrarian trader. I would be looking for a buying opportunity. We turn to the daily chart. The moving averages are still declining. I really would like to see them go flat before I start buying the euro. Beautiful bullish divergence of force index, just fantastically beautiful bullish divergence of the force index on the daily chart. Look at the deep bottom in April. That was the power of bears. MACD histogram went above zero, breaking the back of the bears. And at the end of last week and on Monday, it traced a new low. So prices are much lower, but the bottom of MACD histogram is much higher. That's a bullish divergence. I would be looking to buy the euro.
Thank you, Alexander. And now adding gold.
Speaking of kangaroo tails, look at the weekly chart. Do you see several beautiful kangaroo tails? That's it. That was the peak. And if you look in June of last year, there was a beautiful bottom in the kangaroo tail. So as we approach the right edge, what did the market do? What did gold market do? It threw a tail up, meaning that it tried but failed to go higher. Then there was a test rally trying to go back into that area. The test failed, and gold entered a bear trend, and that's what it is now. It's below value. It hasn't reached its lower channel line, so it's basically downtrend is in effect. Nothing much to do there. So my system says, if it's in a bear market on the weekly chart, just go to the daily, look for shorting opportunities. So we go to the daily chart on the right, and here you can see how this decline has been going on since mid-April, and every week or so, gold gold rallies and touches the value zone. And then it collapses again, touches the value zone, collapses, touches the value zone. And it just attempted to touch the value zone yesterday and it failed. So if you're a short-term trader, when gold reaches its value zone in the daily chart, looks like an attractive trading opportunity on the short side. But this is only for very active traders who really spend time in front of the screen. This is not a position trade. Position traders should wait until we get something more substantial.
Thank you, Alexander. And now I'm adding oil. Here's Brent. Just give me a second.
Crude oil. Oil is not having a very good week. Looking at the weekly chart, does anybody see a real long kangaroo tail on it? Yeah, that's it. Thank you, Roman. There it is. So that was, and again, that was war-related. There was a question about oil supplies. Russia was excluded from many markets, banned from exporting to the US. Although today's Wall Street Journal reports that a new chain of middlemen has emerged, and they're pretty busy trading Russian oil, selling it to China, selling it to India, selling it to whoever wants cheaper oil, cheaper, lower quality oil. Russian oil is not Brent, it's Urals. It usually trades at a discount to Brent, and so now the discounts are deeper. And as always, when there's money to be made, there's a chain of not well-known middlemen who are moving this oil. But in any case, plenty of oil in the world. And here is another fundamental factor for you. The U.S. central bank is on a total war path against inflation, and they are actively raising national interest rates. And just the other day, the chairman, Mr. Powell, the chairman of the Fed, said that they can become even more aggressive if inflation doesn't lie down and play nice. So what will happen is that well, not what will happen, but what may very well happen is that high interest rates may end up pushing this country into a recession. Lots of business people I talk to expect a recession. The rising interest rates are bad for the stock market, are bad for the economy, and a bad economy is not good for the stock market. By the way, the reason for that is that in a modern, if you go to a wonderful traditional country like Afghanistan or Somalia or something, and all business is done on cash basis. So you have cash, you do business. You don't have cash, you cannot do business. Once you come to a civilized country, to even minimally developed country, everything is done on credit. So you want to buy a house, you get a mortgage. You want to build a factory, you get a bigger mortgage. You want to buy goods, you get them shipped to you today, and invoice is payable in 30 days. So everything is done on credit. And so when the price of credit goes up, the price of doing business goes up throughout the economy. We'll give you an example. In the US, if you were buying a house in December of last year, and you took out a mortgage, let's say a 20-year or 15-year mortgage, the interest rate was 3%. Today, the same mortgage will cost you more than 5%. So it means that people will have to pay a lot more, which means they have to buy smaller houses. So demand on construction is declining. In any case, so interest rates are very important. And as economy slows down, the demand for oil is going to diminish. So I've been looking at oil stocks for the longest time, and I know that one of the oil stocks came up in the list that Roman sent to me today. They all look very toppy. Have to be careful shorting them, but I think big shorts are coming up in energy stocks. Let's continue.
Thank you, Alexander. I think we looked at all main markets, which what we usually do, and now we can go forward to stocks and just a small introduction. So I try to find like different stocks, like from different sectors, from different industries, just to look at them. And we can start with Boeing.
So for some reason, no envelope there. Okay.
Yes, it's
just waiting. Okay. I see it's coming up.
Yes.
Well, Boeing is in a bear market, right? And the thing that really pushed it down during the last months, there was a crash. There was a Boeing crash in China. Yesterday, Wall Street Journal reported that the most likely reason for the crash was intentional move by one of the pilots. Somebody flew the plane into the ground. There was nothing wrong with the plane. There was everything wrong with the crew. And come to think of it, there was an Egyptian plane that got flown into the Atlantic some years ago. There was this Malay plane that disappeared over the Indian Ocean. German Wings second pilot flew the plane into the ground. Now in China, I'll be flying on Friday. I hope the pilots are in a good mental health there. In any case, there's stock is in a bear market. It had this kind of hysterical drop because of the crash, and it stabilized when it became when the information came out that the most likely, not 100% yet, but most likely, the crash was human driven. So looking at the daily chart. You know, before I start buying, I want to see something, some kind of divergence pattern, and I don't see anything here. It looks very undervalued here, but without the divergence pattern, I'm really not eager to buy anything. I would be careful. I would be standing aside.
Thank you, Alexander. And another company which is related also to
United Airlines.
Yes.
The user of those airplanes. Well, the demand for travel is increasing in the US and apparently worldwide. There was a severe drop. Can you see a kangaroo tail on the weekly chart? There was a severe drop in January. That's when the Omicron variant came out, and people who've been so tired from the pandemic and so they were finally through with it. Pandemic is back, and that was this kind of panicky decline. Once again, Mr. Warren Buffett, be greedy, be fearful when people are greedy, and be greedy when people are fearful. People were fearful in January. United Airlines had a nice rally, went near its upper channel line, and now at the right edge of the weekly chart, it is straddling the value zone. And when I see something like that, I say the stock is fairly valued. It is, you know, in order for me to buy, it has to be undervalued. In order for me to sell short, it has to be overvalued. This stock is fairly valued. So when I see something like that, I just move on. Fairly valued. What have nothing to do with it. Let's look at the next one.
Thank you. And the next one is Walmart.
Walmart had a bad day today. Had a bad day. They announced earnings, and the earnings were not good. Walmart is a major U.S. retailer. If you're overseas and you ever come to the United States, if you're somewhere not in the cities, you have to go a little provincial. You should go and just walk into Walmart once to see kind of it's insane. It's insanely big, and they sell everything, and prices are cheap, and they don't sell the highest quality, but they sell reasonable quality or cheap stuff. It deserves to be seen. So the fact that their earnings were poor led to this huge run. The stock dropped from from about 148 to 123, so it lost about 15% of its value. Enormous company. Now, so the company is not going to go out of business. I mean, this company is sort of part of Americans' way to shop. I mean, everything is Walmart. So the company is not going to disappear. It's not going to go out of business. And there's no need to be a hero and try to catch the very bottom. But I would be looking at the impulse system, which is now red on the weekly and daily charts. That little strip that goes across. Red prohibits me from buying. Green prohibits me from selling short. I would wait for this thing to stop being red and look to buy for the long term. It may happen. It may happen in the next couple of months, maybe. It's not going to happen this week or this month. Stay tuned.
Thank you, Alexander. And another company, ConocoPhillips. So
yeah, well, that's this energy company that look at the weekly chart, right? On the plus side, it goes from the lower left corner to the upper right corner. There's a song. You don't need a weatherman to tell which way the wind is blowing. Right? This is a bull market. This is a bull market. The wind is blowing up, and if you want to trade it as a bull, you wait for this oil company, very large American oil company, actually a combination of two companies, Conoco and Phillips Petroleum. Excuse me, I had to step away for a second. I hear something. I think there's a truck in my front yard. I'll be back in 10 seconds.
It's important when you live outside city.
No, not me, false alarm. So what you have to do if you want to trade the bull market is wait until it declines into the value zone. And you see every couple of months there is a wonderful buying opportunity. And that's one way to trade the stock. Another way to trade the stock is to see what's happening now. Look, it had this very serious rally in February, pull back to value, another rally slightly above February and failed, back to value. And this week, this is the weekly chart, this week hit again slightly higher than the previous peak, and now is trading off peak. Look at the MACD histogram, look at the force index below, I'm sorry, the bottom pane, and look at the severe bearish divergence. Look at the peaks in February and look at the peak now this month. So the stock is trading at the same height, and this indicator, which measures volume as well as price, shows that the bullish pressure is just evaporating. Not a good sign. We go to the right side, to the daily chart. And it's less expressive here, but we see a developing bearish pattern in MACD histogram. It's not a true divergence. In order for it to be a true divergence, we have to see a crossover of the central line. It hasn't happened. But the daily looks not strong. The weekly looks very suspicious. And the only thing that prevents me from jumping into it and shorting it today is that, well, two things. The main thing is that the impulse system is green on both weekly and daily charts, and I'm not allowed to short, to sell short when the impulse system is green. And another thing, I think one of the reasons it's holding up okay today is that everybody knows that energy has been going up, and when the market is ugly and people want to buy something, they get into energy as a defensive type of trade. Well, eventually all of those defenses collapse. I think that's what I had for ConocoPhillips. But today I would just stand aside and wait for the impulse system to release me to be able to trade it short. And in the beginning of our meeting, Roman said that he will be talking to you how to get these instruments on your own computer. So listen to him at the end of the class.
Thank you, Alexander.
Apple.
Yes, I'm adding Apple. Oh, well, Tesla appeared on the left side.
Yeah.
That was good.
Not a happy looking chart, and what I especially don't like about it is that if you look at MACD histogram and force index below, they both made a new lower peak, new lower bottom, both indicators, than at the previous bottom, which means that the downtrend is fully confirmed, and that as bears crush the stock, the indicators are confirming that bears are stronger than bulls. So for me, it is way too late to short. I did a little shorting earlier this year, but I was afraid to keep a short on Apple for a very long time, so I took a bit of money off of the table and sort of stopped watching it. Now I see, of course, that it developed a nasty downtrend, went from about $180 to $140, so losing almost 20% of its value. And it doesn't look like the end is in sight, because the strengthening of the bears on the weekly chart suggests that this thing wants to go lower. Let's take a look at the next one, Tesla.
Yes, and just till I'm adding, it's let's say the last talk which we planned for today, and I just want to ask for our audience to prepare their questions, so we will have like approximately 5 minutes for Q&A session.
Okay, I'm actually looking at questions that came in. Okay, so let's talk about Tesla. Tesla is a hugely popular stock, and here's an interesting point for you. Lots of people who can't afford to trade stocks trade options as if options were a replacement for stocks. They are not. Don't ever fall into this fantasy that you cannot afford to trade the stock, you're going to trade options. It's the same thing. It is absolutely not. It's an absolutely different way of trading, different trading options instead of stocks is really a very, very poor idea. Learn to trade stocks, options, completely different game. I trade both, but completely different game. Be careful. But having said that, half of all the options volume traded in the United States is for Tesla. So that's the most actively most active optionable stock that we have. Looking at the weekly chart on the left, we see a kangaroo tail in January and a very nice rally after that. The stock came down last week and took out its January bottom. And to me, this is one of my favorite patterns in technical analysis, a false breakout. The stock breaks below support, but instead of continuing lower, it returns back above the support level. So we have a false downside breakout, which we had last week. And this week, Tesla is retesting that false breakout. We will know soon enough whether it lives or dies. And if it turns away from it, if it rallies and closes above 720, 730 again, it will confirm the false downside breakout. And at that point, a MACD histogram is likely to turn up. We will have a bullish divergence of a MACD histogram. We already have a bullish divergence of force index. So I think Tesla is groping for a bottom here. I would be afraid to sell it short. I'm actually looking to get long. Looking at the daily chart, there was a kangaroo tail last week, a false downside breakout on the daily, and look at this beautiful bullish divergence of force index on the daily chart. So look how deep the bottom was in early May. Look how deep the bottom was last couple of days. So I do think that Tesla is groping for a bottom here. Just as the overall market, just as the general market I'm just trying to pull up a quote on my system. Holding near the lows. As I said, the key point. We had a spike signal this week. A spike signal doesn't mean that it will immediately explode and go higher. It may or it may not, but it suggests that the market has passed the zone of maximum fear, and the next move is higher. And as I said, the usual target is the value zone on the weekly chart. So that's how I am positioned in this market. Roman, let me take a look maybe at the questions. Kai Patrick is asking whether you use impulse release indicator. I don't, because it's actually something that my programmer added to the system because he developed it and he was using it. I don't. I see several comments, screen frozen, this and that. I hope
everything was good. It's
that's
just
yeah, happens. Alex Pop is asking to take a look at ASML. Maybe put up an ASML chart. You know, the thing with ASML, I think I've said it before. When I recognize the bottom of the bull market, bear market, I'm sorry. When I recognize the bottom of the bear market, I'm going to buy a lot of ASML and just hold it for a long time. It's an amazing company. You know, the modern economy is all based on computer chips, and ASML is the only company that makes machines for making computer chips. Absolutely key role in the economy. It traded near $900. It's now trading at a discount at about 600. It doesn't look that great for a bottom. Here is a stock to look for a bottom. No, it just doesn't. I don't think we've seen the final bottom in ASML, but take a look at this stock. Generac, G as in George, N as in Nancy, R as in Robert, C as in Charlie. Generac.
GN
RC.
R
George, Nancy, Robert.
Generac
Charlie.
Holding, right?
Yes. Yeah. Yeah.
So waiting for a weekly chart.
Sure. So it's a company with a wonderful product. I bought. They make emergency generators, among other things. They cost thousands of dollars, and if you live in the country and you have some money, you want to have that generator. I bought this generator. I have it in my near my house. It took me a year to get it delivered. A year. So everybody, they make a product that everybody wants, and the product that's very useful. So if you live in the country and a tree falls and breaks electric lines, and everybody is sitting in the dark, I have an absolutely normal electricity in the house. Lights, washing machine, refrigerator, everything. Beautiful product. Generac traded, so fundamentally very good. Generac traded above $500 a share at the top of the bull market, and it lost about 60% of that. It's traded down to $200. It's now $211. Look at the weekly chart and look at this beautiful bullish divergence of a MACD histogram. How strong, I see Roman is circling this tremendous bump down in January when the stock just look how deep a MACD histogram was. It goes above the zero line, breaking the back of the bear, and then now it's below zero line again. So look how much lower the stock is, how much higher is the bottom. And same thing with force index, beautiful bullish divergence of force index. If you look now at the daily chart, you can see how at the end of April the bears were very strong. You can see it's a MACD histogram, deep bottom below zero. There was a rally at the beginning of May, breaking the back of the bear, and look at how shallow this latest few declines are in the MACD histogram. So to me, it basically shows that the bear trend in Generac is over. The bear trend occurred because things got oversold and I'm sorry, got overbought and needed a correction. But this thing is really getting ready for action now. This is the kind of pattern I look for when I go looking for stocks. Not allowed to trade today. Why? Because the impulse, the strip shows that the impulse system is red on the weekly, red on the daily. No buying today. But stand by, be ready. Let's see.
I think you can pick up, let's say, the most interesting question, which we will see.
I don't. Because should we use lower time frames like 5 minutes, 15 minutes to look for an entry for a trade? Absolutely. Actually, I use 25 and 5. That's my favorite combo. Is what's Roman? I'm sorry. What's the interesting question? Maybe you read it for me. I'm not sure which one you're referring to.
No. It was a lot of questions. Just we were already after time, so maybe you will see like some questions which you want to answer for today's session, just for the last one.
Jason asking, what's your opinion about intraday trading? You can only do it if you can do swing trade. You should not day trade until you can look in the mirror and say, I can trade swings. In other words, I can take money reliably holding positions for several days or maybe a week. Then you can go intraday. If you cannot take money from the markets trading swings, stay out of day trading. Day trading is the same game, but it's much faster. If you don't have reflexes to take money from swing trades that last 2, 3, 5, 6 days, you will lose money day trading. You have to earn the right to day trade. I think we sort of covered them all, if I'm not mistaken, Roman.
Thank you, Alexander. Yes, I think we covered pretty much all of the questions which was shared, and all topics which was planned. So from my side, thank you, Alexander, for this class. We'll meet personally like in a week.
Hey, you're going to be in Thailand?
Yes. I'm back in a couple of days.
Super.
Thank you, Alexander.
Thank you very much,
so
and look forward
we'll
to seeing you
see.
shaking.
Thank you. And for those participants who are here, I will say some words about Alexander indicators, which I mentioned like at the beginning, and actually what we saw during today's class, like on our MT5 platform. So we provide indicators which was developed by Alexander for Admirals clients, and you all can get them. So to have a request, you need to send an email to email address elderdisk@admiralmarkets.com. Just give me a second and I will also copy paste and add it to our chat, so just in case to allow you just not to type it on your own, and actually just copy paste, and yeah, so all indicators will be provided to you, and if you're not Admirals client so far, so you can open an account, or anyway, if you're just planning to open an account, so you can send a request, and our beloved customer support team will contact you and will explain how to open an account and how also get those indicators. In the package, we sent indicators itself and chart templates, and also video tutorial how to install. Here is an email. So yeah, just send us a request. If you're already a client, we will send them back to you, and if you're not, we'll explain you how to open an account. And remind that those indicators we provided for free, but they work only on real accounts with a balance of more than 200 euro. Also, what I want to say about our contest, unfortunately, we didn't have like winners for previous months. So I want to encourage all of you who are watching us right now on our YouTube channel and participate in our live webinar. So we have that contest on our Admirals YouTube channel. So if you're not subscribed yet, so it's a good time to do this. I'm also sharing a link to our global YouTube channel. So the contest is super simple. Each month we upload a recording of a webinar of previous months, and under comments of that video we have a contest. The rules of contest are also quite simple. So you need to subscribe to our YouTube channel, like the video, suggest a trade for one asset that is traded in Admirals. It can be a stock, it can be a commodity, it can be instrument on your choice, so but you can pick up from instruments which are traded in Admirals, and it's more than 8,000. So I bet that instrument can trade, but you can check. And in this contest, you need to provide suggest a trade. You need to provide entry price, stop loss, take profit, and date when you do that suggestion, when you do your post. The thing is that if your trade, so for example, you provide entry like here, stop loss is here, take profit is here, and if your trade will be executed from a period of from 19th of May till 22nd of June, and if it will be closed by take profit, or the price will be quite close to take profit, you will be able to get the book with Alexander's signature. We each month we pick up one subscriber, one participant who whose trade will show the highest movement So if a trade will be closed by take profit, so it's will increase chances to win Alexander's book. But just not to forget, subscribe to our YouTube channel. Tomorrow we will upload video, and then you can also start taking participation in this contest. And also, it's important thing that it's prohibited to edit your comments. And by the way, normally, like we did previously, we collect questions to Alexander also under that video which you are watching right now on our YouTube channel. So if you want Alexander to reply or to answer your questions, so left them also under the recording, and I will provide them to Alexander in advance, and he will look at it, and luckily they will be answered like during next webinar. And yeah, by the way, next webinar we will on 22nd of June. You already registered, so for those who are visited it's like not us in Zoom, you don't need like to do a registration. For those who are watching us on the YouTube and who want to participate in live session, so under the video you also can find the link and register to the next event. Thank you. That's it also from my side. I wish you a good evening. I wish you a good month. So we'll happy to see you next month together with Alexander, and also go deeper into trading. And of course, if you have any questions, please contact us. Thank you from my side, and have a good evening.